Hello, Assalamu alaikum students. This is your teacher Azka, but again I teach accounting and business to O levels and A levels and Adexcel students. So I am come up with one more video. Let's see. So this is again for O levels accounting, October November 2022, paper 1, reading 2. So let's start doing these MCQs. Okay. Um, Okay, so we have the MCQs that which statement is not correct about the reasons of using international accounting standards. Okay, which is not. So first of all, assessed when making comparisons between companies. Yes, we are using international accounting standards so we can compare different companies' accounting with each other. So this is the reason of using the international accounting system. But remember, we are just going to take the option which is not correct about the reasons for using the international accounting standards. B is improves the reliability of accounting information. Yes, this is also true. Narrows the areas of difference in financial reporting. Yes, this is also true. Makes the preparation of financial statement less time consuming. No, basically, this is not necessary. That if you're using the international accounting standard, so your financial statement would be having less time to prepare. So this is not the right option. So it means that this is the right option. B is the right option. Okay. Uh, let's see 34. So what is meant by business entity principle? Okay. So we know that what is a business entity principle? Business entity says that business is like having a separate legal entity. This is a business entity concept. So all aspects of a business are recorded in money terms. So yes, this is in like um, all aspects. Okay, sorry. So what is meant by the business entity principle? So this is not the business entity principle. Business entity concept says that business having its own legal identity, and you cannot mix up the identification of the owner and the business. So it means that this is not goods taken by the owner for personal use are not recorded. Okay, this is also not the right option. It is assumed that the business will continue to operate indefinitely. This is the going concern concept. Transactions are recorded from the point of view of the business. Yes, this is the right option. Because whenever any transactions happen, so we only record that with the point of view of the business, not the point of view of the owner. Okay. MCQ number 33. A business renewed an insurance policy. The total amount paid was charged as an expense in the income statement for the year end, though half related to the next financial year. Which accounting principle has not applied? Okay. So business, basically we paid some insurance and we paid some like insurance in advance, but still we should not include the advance payment in the fund profit and loss statement, but we did record that. So what the principle is not applied here. Okay, so first of all, the duality. So duality is very simple. Like every transaction has two effects. If something is debiting, so something is crediting for sure. So this is not the concept, which is not applied here. Okay, and B, historic cost. Historic cost says that you should record your all non-current assets or like your asset on its historic cost. Its cost. This is not the right answer. Matching. So matching can be right. Why? Because matching says that whatever you have earned during the year, like the revenue, so your expenses should be matched with your revenue. It means that if the expenses has incurred this year, for example, in 2022, so you should record the expenses in this year. But for example, if you paid something extra for 2023, so you cannot record that extra payment in 2022. Why? Because this is not related to this year's expense. So this is a matching concept. So yes, matching concept is not applied here. Money measurement, again, like this is not the right option because money measurement says that everything should be right or everything should be in record in the business, which may be having some monetary value. So D option is not the right option. Okay, 32. A trader provided the following information: gross profit, gross margin, profit margin. What would explain these changes? Okay. So in year two, we have gross profit, which is 40,000, year two, 75,000, gross margin is 35%, and in year two, this is again 35%, 11%, and 22%. So what would explain these changes? Okay. So first of all, an increase in selling price and decrease in sales quantity. Okay, so if there is any increase in selling price and decrease in sales quantity, so our gross profit should be decreased. But as you can see, this is increasing in year two. So this is not the right option. An increase in selling price and an increase in expenses. So if the selling price increases, so okay. So if the selling price increases, so it means that our GP can increase and it is right here. But like this statement is right for the GP because if the sales revenue is increasing, so it means that your gross profit will also increase. But if you see that they are saying the increase in expenses, but if you see that after the gross margin, profit margin is 11% in year two and 22% in year two. So basically, expenses are not increased here. Why? Because if it was increased, so it means that your profit margin also decreases, but it's not decreasing here. So again, this is not the right option. An increase in sales quantity and a decrease in selling price. So again, if the sales quantity and there is a decrease in selling price, if you see the gross margin is similar in year one and year two, and also gross profit is increasing. So again, this is not the right option. An increase in sales quantity and a decrease in expenses. Yes, this can be happen. Sales quantity has increased, that's why gross profit we can say that this is increasing, and your profit margin is also increasing. Why? Because your expenses has decreased. Because if your expenses has decreased, so it means that now there are lesser amount would be deducting from the GP and will be giving you the higher profit margin. Okay, so the option is the right option. Okay, so now let's see the other one. 31. When calculating the liquid asset ratio, what is compared to the liquid assets? So liquid assets, basically those assets which can be easily convertible and quickly convertible into the cash. Okay, so current liabilities. When calculating the liquid asset ratio, what is compared to, okay, what is basically compared to liquid asset? We know that asset test ratios formula is current assets divided by current liabilities. So we compare current liabilities with the liquid assets, it means with the current assets. So yes, A option is the right option. So we should not, like, I don't think so that there is a need to, to check the other options, because A option is the right option. We know the formula. Okay, 30. Uh, Naima provided the following information: revenue, gross profit, and profit for the year. What was her profit margin? Uh, so now, like, this is very easy. How can we find it out? So the formula is to find out the profit margin. Um, Profit for the year. The formula is for the profit margin is equal to profit multiply 100 divided by revenue. This is the formula we are going to use. So 3,500 is the profit and revenue is 28,000. So basically, if you see, we are basically finding out the profit margin. So it means that what is the margin in sales? Uh, it means that for how many sales, what are percentage according to percentage of profit according to the sales. So 3,500 multiplied 1,100 divided by 28,000. So we have the answer which is 12.5. So 12.5 is the right option. 29. Thabo provides the following information. Revenue is 250, gross margin is 20%, and rate of inventory turnover is 5 times. What was the average inventory for the year? Okay, so let's find it out. First of all, we will be using the formula of rate of inventory turnover. They're asking us to find out the average inventory. So we can just find out the average inventory by the using of the formula of rate of inventory turnover. So rate of inventory turnover is equal to cost of sales divided by average inventory. So cost of sales is equal to cost of sales. What is the cost of sales here? Okay, so we have the gross margin, which is 20%. Okay, so basically we have to find the cost of sales. Okay, so now let's find it out. So 250,000 is basically the revenue. Okay, so we can easily find out the gross profit, multiplying 20% with the revenue. So if you just apply 20% on the revenue, so you will be getting your GP. So 250,000 multiplied 20%. So your GP would be 50,000. So this is your GP, which is 50,000. So GP and revenue. So just deduct the GP from the revenue. So you will be having your cost of sales. So your cost of sales is equal to 200,000. Okay, so this is the cost of sales. So now let's just put cost of sales here. So this is 200,000. 200,000 divided by X because we don't know that what is the average inventory. But rate of inventory turnover is given here, which is 5. 5, 200,000 divided by X. So just make the X subject here. So 200,000 divided by 5. This would be shifting the place of the X. 200,000 divided by 5. So you have X is equal to $40,000. This is your average rate. Okay, so C option is the right option. Okay, so let's see the other question. So 28. Okay. Aruna does not maintain full set of fidelity records. She provided the following information. What was the cost of the purchases for the year ended 31st July 2022? So whenever we have to find out the cost of sales, so we can easily make the purchases account. So how can we make it? Okay. So first of all, as you can see that we have the trade payables on 1st August 2021, which is 23,450. So this is basically a balance period. Because we know that in the purchase ledger or purchase like the payable account, we always record the balance PD or whenever our payables increasing, so we'll be recording it on the credit side because our liability is increasing. So 2, 3, 4, 5, 0. So trade payables on 31st, this is year end payable. So it means that this will come here, balance CD, so it is 27290. Okay. Cash purchases. So cash would not be the part of this. Payments made to credit supplier. So these payments will be recorded on the credit side, debit side. Payments is equal to 16,800. Uh, okay. So the balance of this amount is 195 290 195 290, and deduct the 2345 from here. So we will be having the difference, which is 171840, which is our purchase during the year. So it means that option B is the right option. Okay. So now move forward. Um, yeah, okay. So Chan provided the following information. So we have some non-current assets, inventory, trade receivable, bank overdraft, and trade payables. What was the Chan's profit and loss for the year? Okay. Mm, so let's find it out. So first of all, let's see the assets. So assets, inventory, and the trade receivables. Okay. So we are going to find out the profit or loss for the year. So first of all, let's find out the total assets and total liabilities for 2021 and for 2022. Sorry. Okay. So for 2021, total assets, total assets minus total liabilities. Okay, so 10,000 is the non-current asset, 10,000 plus 2,500 plus 1,500 minus this is the current liability, which is 800 plus 1,000. Okay, so this is giving us the answer, which is 1,400. Sorry, 14,000 minus 800 plus 1,000 is equal to 1,800. So the total assets minus current liabilities is equal to 12,200. Okay. So now let's find out for the 2022. For 2022, 12,000 is a non-current assets. 12,000 plus 2,000 plus 1,300 minus 900 plus 1,900. So we can simply find out the profit or loss for the year by finding out the difference between the total assets and the total liabilities. Okay, so we have 15,300 minus 2,800. So the answer for 2022, this is 1,250. So now deduct the 2022 2021 years, the difference between total assets and total liabilities, and for the 2022, it is 12,500. So 12,500 minus 12,200. So we have the profit, which is 300. So 300 is the profit. So B option is the right option. So let's see the C part. Sorry, 26 part. In a manufacturing account, carriage on raw materials was incorrectly treated as a factory overhead. So carriage on raw material would be the prime cost, but we recorded it as a factory overhead. So how did this error affect the prime cost and the cost of production? Okay, so your prime cost would be understated because you haven't recorded it. You should record in the prime cost as a prime cost. Okay, and your cost of production would not be affecting. Why? Because we know that in the cost of production, prime cost plus the factory overheads, both are the parts of the cost of production. So that's why whether this is recorded in the prime cost, whether this is recorded in the fixed overhead, like the factory overhead, so your cost of production um, would not be influenced. So it means the prime cost is understate and the cost of production is no effect. So this is no effect, but this is overstate. So C option is the right option. Okay, 25. Um, Den makes t-shirts which are stamped with the design using fabric paint. He provided the following information. What was the total of direct cost? So this is very easy. So we know that fabric for t-shirt, because we know that for making t-shirts, whatever we are using, this would be the direct cost. So fabric would be direct cost. Factory heating and lining is not. This is indirect cost. Fabric paint. This is also direct cost. This is direct cost. This is direct cost. Factory rent. So this is the indirect cost. There is of machine operators. So machine operator, this is would also be the direct cost because they are directly making the t-shirts. So 10,000 plus 4,000 plus 16,000. So your direct cost would be 30,000. C option is the right option. Okay, so now let's see 24. So club had an accumulated fund at the start of the year, which is 18,000, and at the end of the year of 16,200. New equipment costing $1,100 was bought during the year. Total expenses for the year were 9550. The only income come from the subscription. How much were the subscription for the year? Okay. So for this, first of all, the accumulated fund for the year at the start of the year, it is 18,000. Okay. And total expenses. So we have to deduct the total expenses from here. And at the end of the year, our accumulated fund is 16,200. So we have to deduct it also. So whatever the answer we'll be getting, this would be a subscription income. Because if the start of the year accumulated fund was 18,000 and expenses which incurred during the year, which is 9550, and the accumulated fund we have at the end of the year, so it means that whatever the amount would left, this amount will be showing us the subscription which we receive from for the year. Okay, so this is 16,200. So we have the answer, which is 7750, subscription. Okay, question number 23. The financial year of a club ends on 30 September. During the year end 30 September 2022, the club received an interest-free loan from a member. Okay. In which of the club's financial statement will disappear? So this is an interest-free loan. So basically, this would be the part of receipt and payment account and the statement of financial position. There is inflowing of the cash, and this is also a kind of loan, but this is interest-free loan. So this would be the part of your financial position. So it means that C option can be the right option, because if you see, because we know the income and expenditure, we do not record the loan thing. We only record the incomes, expenses, GP, and revenue. But if this is the club account, so maybe we will be preparing only income and expenses in the income and expenditure account. But yes, if this is for the canteen, so we'll be recording the GP and sales, these kind of things. Because club doesn't have any kind of inventory, but if there is something built in it, for example, if there is something like canteen is maybe opened in the club, so yes, for the canteen we will be preparing the account in which income and expense account, in which they will be having the GP, the gross profit, the opening inventory, closing inventory, cost of sales, these kind of things. So, but for the loan thing, we only recorded the senior payment account, which is just like the cash flow and the statement of financial position. The C part is the right part. Question number 22. What is included in the equity of a limited company? Ordinary share capital, yes. Retained earnings, yes. General reserve, yes. Okay, so A seems to be the right option. Ordinary share capital, yes. Retained earnings, yes. Okay. So general reserve should be added in the equity, but it hasn't written here. So this is not the right option. C. Ordinary share capital, yes. Debentures, no. General reserves, yes. This is the equity of limited company. So in the equity, there are only share capital, retained earnings, general reserve, share premium. These kind of things would be recorded. D. Ordinary share capital, yes. Debentures, no. So it means the A option is the right option. 21. Limited company provided the following information: non-current assets or share capital, 5% debentures, non-current assets. What were the retained earnings? Okay. So how can we find it out that what is the retained earning here? Hmm. So we have the non-current assets. Okay. So first of all, add or ordinary share capital. Okay, and we are basically doing the reverse working. Add debentures and deduct the non-current assets. So you will be having the retained earnings. So there is non-current, there is basically ordinary share capital, which is 40,000. Okay, and add back the 5% debentures, which is 10,000, and deduct the non-current assets, which is 35,000. So we will be having the retained earnings. So our retained earnings is equal to 30,000. Oh, so basically this is not 30,000, I guess. This is um, 1 second. I have to calculate it. 40,000 plus 10,000 minus 35,000. So this is 15,000. Sorry, this is not 30,000. This is my calculation mistake. This is 15,000. 15,000 are my retained earnings. Okay. Question number 20. Members of a limited company have limited liability for the debts of that company. What does this mean? Members are equally liable for the debts from the company. No, they are not liable. Members are liable only up to the value of their personal assets. No. Members are liable only up to the amount they agree to pay for the share in the company. Yes, this is the right option. Members are liable only up to the value of debentures they hold in the company. No, basically your shareholders doesn't have any value of debentures. They have their shares. So this is not the part of this answer. Okay. Question number 19. During the year, Sam provided advertising expenses, some of which relate to the following financial year. Sam made an adjustment of this when preparing the financial statement for the current year. What was the effect on Sam's financial statement of making this adjustment? Okay, so let's see. Uh, During the year, Sam paid advertising expenses. Okay, some of which related to the following financial year. Sam made an adjustment of this and preparing his financial statement for the current year. Okay. So what was the effect on Sam's financial statements of making this adjustment? So this would decrease your profit. No, this would increase the profit, and this would increase. Sorry, this would not increasing your profit. Basically, this will be increasing your profit, but this will not increase your liability because your advertising expenses you have paid. And for example, if your advertisement expense is 1500 for the year, okay, and for example, if you have paid 1600, and in the adjustment if they say that $100 is not related to this year's expense, and you have to deduct it because this would be using in the next year. So it means that from 1600 expense we will be deducting 100. So it means that this your expenses are decreasing. So your expenses are decreasing. So it means that it would increase your profit, and this $100 would be transferred in the current assets because we can claim on this $100, and this is our asset because we this is just like a loan which we pay to our advertising agency, and we will be using the services from the advertising agency with the help of this $100 which we paid extra for the next year. So this would be increasing your current assets and increasing your profit. So it means that uh, the B option is the right option. So the next question is, okay, so how would current assets be listed if they are arranged in decreasing order of liquidity? Okay. Hmm. Bank, cash, trade receivable, inventory. So this is somewhere right, but cash should be first. It means that they are saying that you should arrange the asset as per their order of liquidity. It means that we will be arranging our current assets in the current assets and non current assets in the way that which current assets is more liquidate, and it means that which current asset is more easy to convert in the cash. So we know that cash is already in the cash form. So it means this is more liquid. And after that, the second thing is bank. It means that you can convert more quickly the bank into the cash form. And after that, the trade receivables and the inventory. So B option is the right option. 17. Why should inventory be valued at a lower of cost and net realizable value? Okay, so why we record it? To avoid undervaluing the inventory, no. Sometime maybe your lower your net NRV is lower, and sometime your cost is lower. So this is not for undervaluing the inventory. To comply with the historic cost says that you should record your assets on the cost on which amount you have bought it. So, but here you can see that we are only considering the lower cost or the NRV. So this is not the right option. 17. sorry, C part, to comply with the principle of the materiality. So materiality concept is not adjusted here. Why? Because materiality concept says that something which is maybe material for some company, but this would not be material for the any other company. So if you see that there is nothing which related to the materiality concept, so this is not the right option. To ensure the profits are not overstated, yes, we should record the inventory on the lower cost or the NRV because we want that our profits are not overstated. So D option is the right option. 16. Parker received the cash from Alexei, a debt that had been written off as a irrecoverable. How should Parker record in this account? Okay, so he received, but previously he maybe written off the debt as a irrecoverable. So now he has received. So when there is bad debt, so the bad debt would be debit, and Alexei would be credit. But now because he received the amount, so what does it mean? It means that it's because that person is received the amount, so cash would be debited and the debts recovered would be credited. We will not doing anything with the Lexi because previously we credit the Lexi, so it means that we decrease the Lexi. It means that we are saying that we have received the amount from Lexi. So we already carried the Lexi, so we don't need to debit it because if we debit the Lexi, so it means that we are increasing the Lexi. It means that we are supposing that till now we haven't received anything from the Lexi. So it's not like that. We received now. So that's why we will not be doing anything with the Lexi, but yes, debts recovered would be carried and your cash would be debit. Okay. So the B option is the right option. Question number 15. Martha rents out part of the business premises. Okay. Uh, so on 1st of 2021, she was owed rent of 1500 and 31st 2022, she was owed the rent of 1800. During the year ended 31st August 2022, Martha received rent of 66,000. How much was transferred to Martha's income statement for the year ended? Okay, so basically we have to make account here. Okay, so basically this is the rent, this is the income account. So for the income account, we will be preparing APA. A, P, P, A, APA. Okay, so we have the first amount which is 1500 and that was approved. So we'll be recording it here, 1500. Okay, and after that we have received the amount which is 6000. So we should record it here. Income credit, bank debit. And we have received, she was owed 1800 rent. So it means that was accrued at the year end. So we should record it here, 1800 as accrued. So 6,1800 minus 1500. So in the income statement, we will be sending 6300 amount. C option is the right option. 14. On the first day of his financial year, Jackson purchased a new machine costing 20,000. On that date, his old machine had a book value of 6,000. Jason was allowed 4,500 for the old machine part exchange. He paid the balance by check. Machine is depreciated by 20% per annum. How much should be charged to Jason's income statement for the year? Okay, so first of all, we have to find out the depreciation. So 20,000 multiply 20%. So the 4,000 is basically the depreciation. Okay, and as you can see that its old machine's net book value was 6,000 and Jason was allowed 4,500 for the old machinist part exchange. It means that Jason is basically going to sell this, going to purchase one more asset, and by giving this old asset for 4,500. So it means that we should deduct 6,000 for the net value, and it is only sold for the 4,500. So is equal to 1,500. Okay. So basically 4,000 was the depreciation which we recorded in the income statement, and 1,500 is a loss for the year, loss of the gain which we will be recording in the income statement. So it means that altogether we will be recording $5,500 in the income statement. D. Okay. So now let's see the other one. 30. So Ventile purchased a motor vehicle for 35,000. He estimated that it would be used for the 5 years and then sold for 5,000. Ventile depreciated the motor vehicle using the straight line method at 20% per annum. What was the accurate depreciation on his motor vehicle at the end of the year two? So this is very easy. 35,000 was the cost, and its residual value is 5,000, and divided by 5 because its life is 5 years. So this is 6,000 depreciation. Plus multiply it with the 2 because we are going to find out the 2 years depreciation. So this will be giving us $12,000 depreciation for 2 years. So B is the right option. Okay. Question number 12. Hamid purchased a motor vehicle from an overseas motor manufacturer. Which expenditure relating to the motor vehicle is capital expenditure? Okay. So first of all, debit card. Yes, this would be the part of capital expenditure. Insurance, no, it's not because we have to pay it after 1 month. Petrol is also not. Replacement tires is also not. So A option is the right option because it is one-time expense. Okay. 11. After the preparation of her income statement, Emma discovered the following errors. A debt $1,500 should have been written off as irrecoverable. No adjustment had been made for rent prepaid by Emma, which is 2,800. Draft profit is 35,000. So what was the corrected profit? Okay. So now this is very easy. Mm. So basically, 35,000 is a draft profit, and we should deduct the 1,500, but we didn't. So it means that now we have to deduct it 1,500 minus, and no adjustment had been made for rent prepaid of 2,800. Okay, so we have to add this. So this will be giving us the answer, which is 36,300. Okay. Question number 10. $68 paid by credit transfer for insurance was entered in the accounting record as 86. Okay, so the difference is basically 18. Which double entry will be correct this error? Okay, so what happened here basically? Mm, okay. So $68 paid by the credit transfer for insurance was entered in the accounting records as 1860. It means that we paid 68, but we recorded in the bank is 86. So it means that we decrease our bank with the $18. So it means that now we have to increase our bank, and we have to decrease our insurance because we have paid insurance for 68. So we should debit the insurance with 68 and credit the bank with 68. But what we did, we in debit the insurance with 86 and credit the bank with the 86. So now what we have to do, we have to increase our bank and decrease our insurance. So if we want to decrease our insurance, so we will be crediting it, and if we want to increase our bank, so we will be debiting it. So it means that 18 and 18. This is the right option, A part. Okay, so now let's see the question number 9. Okay, so the trial balance failed to balance. Debit column is total 12,1250 and the credit column is 12,200. The following errors were discovered. No entry had been made for cash sales, which is 150. The total discount received, which is 50, had been omitted from the trial balance. What were the totals of the trial balance after the errors had been corrected? Okay, so if this is a trial balance, so what happened? No entry had been made for the cash sales. So we know that the cash sales should be carried. So if we record it now here on the carried side, just give me 1 second. This is debit side, this is credit side. So for example, now we just write 150 here, okay? And after that, total of the discount received 50 had been omitted from the trial balance. So it means that now again it should be right here because discount received is basically um, the credit entry. So as you can see that they are saying the debit total is 1250. So if the debit total is 1250, 12250, sorry, and the credit is 12200. It was previously 12200, 12,200, but now we corrected it. So just add 12,200 with the 50 and with the 150. So you will be having the total of the credit side, which would be 12,400. So this is a corrected balance on the credit side. So basically, they haven't told us to discover, to rectify it. They just told us to write the missing entries. And after recording the missing entries, we have to identify that what would be the total of the credit side. So this is 12,400. Okay, question number 8. Jaswinder maintains a petty cash flow using the impress system. The monthly impress of 1000 is the recorded sold on the first day of each month. So it means that every month we have to give $100 as the interest. In September, the petty cash book has showed the following. Total expense is 83, total receipt is 7. How much cash did the dispenser need to restore the interest on 1st October? Okay. So basically 100 which we paid and 7 which we received. So this is equal and deduct the minus 83. This is giving us 24. So it means that we have only 24 right now. So we have to give 100, but 24 is already 24 is already having our petty cash book. So it means that we don't need to fill the amount or restore the amount by 100. We will be only filling the amount, or you can say restoring the amount, the difference between 124, because we already have 24. So it means that again if you just deduct the 24 from the 100, so it means that you only need to restore $76. So B option is the right option. Question number 7. Which entries should be made to the post monthly totals of the discount allowed and discount received column of the cash flow? Okay. Made to the post monthly totals of discount allowed and discount received in the columns of the cash flow. Okay. So basically, discount allowed will be debiting into the discount allowed account, and discount received account would be crediting in the discount received account. So C option is the right option. 6. On 1st September, Peter sent a check to his correct supplier, John. This was correctly entered in John's book. On the 10th September, the check was returned unpaid due to the lack of funds. Which entry should be made in the John's book on 10th September? Okay. So basically, John will be debiting the Peter and crediting the bank. So this would be our right entry. D option is the right. Okay. Okay, so what happened here? I think I should explain you. On 1st September, Peter sent a check to his credit supplier, okay, John. So what does it mean? If Peter sent a check to his credit supplier, John, so he basically credit the bank and debit the John. This was correctly entered into the John's book. Okay, so John basically correctly recorded it. So John is basically Peter sent check to his credit supplier John. So it means that John, how the John would recording it? John would be recording it the bank debit because he is receiving the amount, and Peter credit. Okay. So on 3rd December, the check was returned unpaid due to lack of funds, but this check has returned. So if the check has returned, so we have to reverse the entries because we didn't receive the amount, so we have to credit the bank. It means John would be crediting the bank and debiting the Peter. Why? Because Peter would be increasing. Why? Because there is still have some amount which Peter owed to the John. So that's why we will be crediting the bank and debiting the Peter. Question number 5. What is not shown on an invoice? Okay. Amount of paid discount down. This is shown on the invoice. Date payment made. So basically, on invoice, there is not date payment made because date payment made means that you have paid the amount, but still you didn't pay. So this would not be recorded. So this is the right option. Details of good supplies. Yeah, this is recorded on the invoice and terms of payment. This is also like how can you pay, what is the terms of payment. This is also shown on the invoice. So question number 4, Abdul sell goods to Rekha on credit. Some goods were damaged in the transit. Which document would Rekha send to the Abdul? Okay, so basically Rekha would be sending debit note, and Abdul would be sending her the credit note. Question number 3. Bilal purchased goods and credit from Asim. Where should Asim record this transaction? So this is very easy. Um, First of all, Bilal purchased goods on credit from Asim. Wow, okay, so Asim will be recording the goods in the purchase ledger, and Bilal purchased goods on credit from Asim. Okay, so Asim would be recording the sales, making the sale ledger. Okay, and also he would be maintaining the sales ledger and also the bank ledger. So we know that sale ledger and purchase ledger. In these two ledgers, we will be recording only purchase and later sales, but other than that, whatever the other things you maybe have to prepare, for example, bank ledger, cash ledger, trade receivable, trade payables ledger, so you will be recording it in the nominal ledger, or you can say journal ledger. So it means that Asim would be recording these transactions in the journal ledger and the C ledger. So D option is the right option. Question number 2. On 1st June 2021, Sue's Capital had a credit balance of 120,000. During the year ended, she withdrew good costing 1800. The loss for the year is 14,200. What was the credit balance Sue's Capital account on 1st June 2022? Okay, so now let's make the capital account. Okay, so the credit balance at the start of the year, which is 120. During the year ended, she withdrew some goods, which is 1800. So it means that your capital would be debit by the drawings. And at the end of the year, because there's a loss of the year, so it means that your capital would be debited by 14,200. So it means that balance BD at the end of the year, which is 104,000. This would be your year ends balance, your year start balance in the capital account. So A option is the right option. Which uh, transaction will increase both asset and liability capital by the same amount? Okay. Credit customer settled his account after deducting a cash discount. No, if the cash discount is deducting, so your capital account would not be increasing. Goods were sold for cash at a price higher than their cost price. Yes, because here your bank is increasing and also your capital is increasing because you sold this asset, or sorry, sold this goods at higher prices. So whenever the cost price is lower and prices are higher, so it means that your capital will be increasing and also your bank will be increasing. So B option is the right option. Rent received including amount prepaid for the next accounting period. So this would be increasing your liability. This is the prepaid which you have received from your customer. So this is not increasing your capital. The owner repaid a business loan from his personal account. So here your capital is increasing, okay, but there is no asset is increasing because money is going out from the business. So that's why the D is not the option. So A is the right option. Okay, so we have done with the all parts. So in the next video, I will be making the next video on the same year, October 2022, paper 1, but variant 3. Okay, goodbye.